to Grab the Horns. My name is Daniel Cooper. I'm really glad that you could join us today. We've got a great stock that we're going to analyze, talking about failing business models like we have the last couple of days here. Another one that we're going to look at today, Barnes & Noble. Did they have a failing business model? Let's take a look at that stock and decide. Ticker symbol is BKS. Let's go ahead and begin. So like we alluded to, we've recently talked about some stocks with some outdated or failing business models. Now, Barnes & Noble, they fit perfectly into that description. It's got the largest footprint of a physical bookstore out there. And its biggest rival, Borders Group, they're now trading on the pink sheet under the symbol BGPIQ. They're undergoing closing of stores as part of their bankruptcy terms. So the number 2 is in bankruptcy right now. The number 1, Barnes & Noble, struggling a bit as well. Now, Borders Group was the second largest bookstore chain at the time it filed for bankruptcy back in February of this year, 2011. Now, back in December of 2010, William Ackman, who we see here, together with New York investment fund Pershing Square Capital Management LP, made an offer of $16 per share to buy Barnes & Noble. Now, they also, at the time they made the offer back in December 2010, they owned 37% of Borders at that time. And that's Pershing Square Capital Management, of course. Now, Borders Group is no longer in a position to make any buyout offers. Really, their focus at this point is squarely on their bankruptcy terms and closing of their stores. However, Barnes & Noble is in a little bit different position than Borders. They received another offer in May of this year, so just a few months ago, from a gentleman by the name of John Malone of Liberty Media. That offer was for $1 billion, which represents $17 per share. A lot of people are putting the fair valuation of Barnes & Noble at about $19 a share, and that's basically where it's currently trading right now. Now, unlike Borders Group, Liberty Media is rich in cash reserves. They've got about $3 million, making the offer a serious one. Now, Barnes & Noble, there's always the possibility they could get a higher offer than the $17 a share that Liberty Media is offering them right now. It's unlikely to move much higher because of its current price. Here's a chart of Barnes & Noble. Again, their symbol is BKS, and we can see they closed today at $19.44. So it's unlikely that they're going to get an offer of much more than what they've been seeing here. There's a serious challenge ahead for Barnes & Noble because of the way that their business model is flawed, which also is leading to the fact that they probably won't get too much higher of an offer if they get one at all. Barnes & Noble's really been facing some struggles with a lot of things that have been coming out recently as far as competition to the general bookstore type model, and they're feeling the pressure on that. They've made some heavy investments recently on their latest invention, if you will, the ebook, which is called the Nook. That's the Barnes & Noble's ebook version. But they've got a lot of competition from Amazon Kindle. And also, the iPad, iPad 2, even the iPhone. They all have that Amazon Kindle app on them, which also gives the Nook a lot of competition. So it's no question why Barnes & Noble has been losing money quarter over quarter here, although they hope that their Nook may be able to help kind of make them return to profitability. If that will happen is yet to be seen here. Now, looking at the chart for Barnes & Noble, in considering its failing business model, Barnes & Noble has the potential to fall back down to a single-digit price if a buyout does not materialize. Again, their stock is trading around $19 a share right now. Could drop off quite a bit if that doesn't happen. We went over some of their competition and what they're facing right now in the market. And let's face it, that brick-and-mortar store model that they have right now just isn't seeming to work for them. Everything is going online. The ebooks are really starting to pick out. And let's face it, you can find things for a fraction of the cost of what you can going into the Barnes & Noble store. So they need to figure out something to do, change their business model. They're trying to do that with the Nook. If a buyout of some sort does materialize, that will save them for the short term. Long run, I still don't know about this company. There's a lot of question marks about their business model. And unless they can change that, you really want to think twice before investing in a company like Barnes & Noble. As always, we really appreciate you viewing this show. We hope you take something away from this and get out there, go grab the horns.